Hi everyone, welcome to the Mighty Trades channel. My name is Johar and welcome to another episode of the Global Market Analysis. So let's take a quick look at a couple of macro factors and try and understand what can happen to our market for the next couple of weeks and the next week. So let's start with the commodities first. So let's look at what's happening at Brent Crude. So as we can clearly see that Brent Crude tried to sort of break out from this descending channel last week, but it looks like it's failed. Last week at least it failed to break out and it's still staying in this downward trend line. It looks like a descending sort of triangle formation. Let's hope that it breaks it on the downside, because if it does, then it should, I think, easily fall towards like $85 levels, which is the previous support. And this could maybe happen because of the lockdowns happening in China, so crude oil demand might reduce from there, which might lead to a correction in the crude oil prices maybe. If we look at gold, then gold is still respecting this downward channel. I try to break out over here on let me switch over to the weekly chart here. So 2 weeks prior it tried to sort of go above this, but it corrected back down, so that's a good sign. Shows that investors are not panicking and selling all their equities and moving to gold. So that is a positive sign for us at least. And let's look at the elephant in the room, which is the US dollar. Now if we look at the US dollar, that's been having an amazing bull run, right? It made this double bottom over here, and since then it's just been on a one-way rally to its all-time high levels. So the last time US dollar was at these levels was back in 2016. Then this was the coronavirus crisis here, 2020, and now it's May 2022, and it's back at its all-time high levels. And if I switch over to the monthly chart, then this looks like a very large double bottom in the making, right, since many years. So it's very possible that US dollar could break out from this level, which is not going to be a very good thing for anyone, if especially in emerging markets, because all that money is going back to the US and we could see a new high being created in US. However, if it does correct from these levels and starts moving back down, then that will be a good thing for the emerging markets. But right now the US dollar is moving up very sharply, and that's not sending a good signal across the world. And if we look at USDINR rate, we can see a similar picture here as well. It's back towards its all-time high levels, which it had created back in the COVID crisis. And again, as you can see, it's very steadily moving up, making higher lows and higher highs. So this is a very consistent move that's happened instead of the sharp move that happened during the COVID crash. This is a very nice consistent rise over here. So there's a very high chance this trend could continue for some more time, which will lead to some sell-off in the equity markets, not just in India but all across the globe. Now let's look at some Asian markets, how they performed last week. So if we look at Japan largely moved down very sharply in the beginning of the week, but then it's recovered and largely just consolidated over here. If we look at Hong Kong, same thing happened in Hong Kong, opened with a gap down and then strongly moved up over here. However, I think with the lockdown that's just announced in Beijing recently, this might not be the case. If you look at the Turkish market, that's still it's correcting a little bit now from the new high that it created. So from the last 2 weeks it's correcting. And if you look at the Taiwanese market, then that is also in a corrective phase since Jan of this year. So you can nicely see a nice rounding formation that's happening here at the top. So not a great sign. If this level is broken, then we can easily see the Taiwanese market at least go down till 15,000 levels. If we look at the European markets, then the French market also moved down and then came back up again. So largely a consolidating week. Same thing for Germany, huge move down, then again a recovery. Another consolidating week in Germany as well. UK also moved down, came back up again, made sort of a hammer sort of formation on the weekly candle. So again, largely a consolidating move. And if we look at the Russian market, I think the Russian market was the only market that performed well last week. So a strong up move that came in the Russian market. It's a nice bullish engulfing candle that is created here, moved up by 9%. And if we look at the another Russian index, RTS, then this also has made a nice bullish move. So at least one positive sign in the market. Now, if we look at the mother of all markets, which is the US market, things aren't looking that great. The US market has been in a corrective mode since March 28th. So the entire month of April is just moving down, and the last 2 weeks have seen the sharpest down move. If we look at S&P 500, same scenario here. In fact, in Dow Jones, this is still above this second support line, but if this is broken, then the next support would directly come in somewhere around these levels, the 30,500-ish levels. For S&P 500, it's broken the second support line. It's given a close here. So now the next support comes in at 4,000. And if you look at NASDAQ, then NASDAQ has broken this entire support zone that we had marked a couple of weeks back. And now the next support comes in directly at 12,200. And if this is broken, then we can see a level of 10,600 in NASDAQ also. So overall, the picture in the US is not looking good. If you look at the volatility index, that has also shot back up over the last 2 weeks. So there is extremely high volatility that's happening in the US market, which is going to have an impact on the Indian equities as well. However, if we switch over to the daily chart, you can see that the largest sell-off came on Friday, which was on 29th April, and something similar had happened last week also. So on 22nd April as well, which was the previous Friday, we saw the largest sell-off in the US market. So the US market moved down by 2.8%. Now let's look at how the Indian market reacted to that the next week, right? So if we look at Nifty 50, so this was the day of the down move on Friday in the US, and then our market on Monday on 25th April gap down opened and then sort of moved down by 218 points, as you can see here. After that, the next day it gapped up and moved up again by 246 points, then again a gap down, then again a gap up, and then again a gap up on Friday, and then a sharp move down by the end of day. So we can possibly expect something similar happening again this time as well, because Dow Jones saw the sharpest sell-off on 29th April, which was on Friday 2 days ago. So we might react in a similar fashion next week, or tomorrow, where the market might gap down, move down again, and then immediately the next day gap up and move up again. So I'm expecting the market to largely consolidate in the zone where it already is. So now let's look at the broader market indices and try and understand what's happening at a sector level. So if you look at the small cap index, that moved down by 2.66%. The mid cap index also moved down by 1.4%. The metal index consolidated for most of the week. It's made a nice doji candle here. This could be a potential trend reversal because for the past 2 weeks it was in a corrective phase. Made a doji here. If it moves up next week, then you could see that rising star or morning star pattern which people keep talking about. So that might be a good thing for the metal sector. So metals should be on your watch list for the next couple of weeks. Bank Nifty did not move down, consolidated for most of the week and moved up very mildly by just 0.12%. Nifty Private Bank, also the same picture. PSU Banks moved down, not like Bank Nifty. So moved down by 1%, and it's made sort of like a gravestone candle here. So a negative closing. I wouldn't say it's bearish and it's going to go down, but a negative closing. So maybe PSU Banks might further correct next week to maybe these levels. If you look at the IT index is in a deep correction phase. As I had said last week also, that the IT index has given a close below this support line, and it continued moving down below this line. I believe that we can see the IT index come down to this level in the next couple of weeks, and we can see these two levels now as the next major support. So this would be the first level, this would be the second level. Let's also take a look at some heavyweights in the IT industry to try and understand who's leading this fall. So if we look here, then we can clearly see Infosys is definitely leading the fall. We can, if we go to the line chart, you can clearly see a double top formation that's happened here. Plus, there's this huge gap that it's made. So Infosys is definitely leading the fall. TCS also a very similar double top. There's no gap down yet, but this is the basic M pattern that it's following. So a breakdown below this level will take it directly back to its last support zone, which should be somewhere around here, 2900 levels or 3000 rupee levels. So TCS and Infi are looking bearish. Tech M again super bearish, moved down very strongly. Wipro moving down very strongly. HCL Tech again similar double top formation here, has already given a closing very close to its previous support. Let's hope HCL Tech survives the fall. LTI again strong down move. Mindtree is in a strong down move as well. Emphasis is also sort of correcting, but let's see if it breaks this line, the price where it's currently at right now, then Emphasis will fall straight down to like 1500 1800 levels. I don't see any support for Emphasis at all. LTTS again correcting, and Coforge is also correcting, but Coforge seems to have stabilized, unlike the other stocks. The other stocks had big red candles here for the last 2 weeks. It sort of looks like it's stable, so maybe there might be something cooking in Coforge that you want to keep a look at. So that's the view on the market. Now let's continue with our other sectors. So FMCG sector had a good week, definitely. Let me move this away. Okay. So FMCG sector moved up nice and strongly by 1%. Media stocks corrected heavily. I think there's something happening in Network 18, TV 18. Those two stocks moved down by like 18-19% on Friday. So that has caused the entire media index to fall. Infrastructure stocks consolidating since the last 4 weeks now in this range. Something might be happening there. Real estate stocks have made a doji candle, so pure consolidation that happened last week could be a sign of a trend reversal. Maybe you could move up from here. Auto sector had a good week, consolidated for most of it, moved up very mildly by 0.45%, but a good positive closing. And they have been largely in a positive run since mid-March, right? Since 7th March, it's been on a good up run. So let's hope that up run keeps continuing. So auto stocks should be on your watch list as well. Energy sector, have been telling you guys since weeks now that the energy, something's happening in energy. However, it has made a doji candle here right at the top. This could be a sign of a slight reversal that might happen. You could maybe see a small correction come down to these levels, potentially because of the China lockdown situation, which might cool off some of the oil prices and coal prices because of lesser demand from China. So you could see it maybe come down a little bit for the next 2-3 weeks and then resume its upward journey. If you look at the consumption sector, again consolidated for most of the week in this range. So in the last 4 weeks it's been in the same range, consolidating here. Finance stocks moved down slightly, made a big gap down, tried to move up again, and then again probably by Thursday Friday gave a negative closing. Pharma index, nothing happening here. I think pharma industry is in a corrective mode since a very long time now. and there seems to be no momentum in pharma stocks. If you look at the broader market, Nifty 500, so the last 2 weeks has been consolidating in this range of 15,000 and 14,600. So broader market also consolidated largely and only moved down by 0.75%. If you look at Nifty, then again consolidating in this box for quite a long time now. It made this large bullish candle on 28th March. Move came here, made a doji, then moved down the next week on 11th April. Then the previous week, which was 18th April, made again a doji. And then last week we had a gap down opening. We tried to move up, but then by Friday we largely closed in the negative. So if you look at the daily chart, this is how the consolidation has looked for the last 2 weeks in this one range that the market has been in. So largely I expect the market to behave in a similar fashion. I think we'll see the market maybe gap down open at this level somewhere here, 16,900-ish, and then we might just move up again and then continue consolidating till the next bad news hits the market. So I hope you have been able to get some understanding from this level and probably get some idea on how you should size your positions or what you should do in the market. I largely believe that markets are going to get more volatile now. The volatility index in the US has shot up, so it's very possible India volatility will also go up. But I think that in that volatility, traders are going to get killed on both sides, and you should continue to keep your trade positions very light, because markets are just going to keep going violently up and down in a very small, tight 1,000 point or 500 point range. So there is no, I don't see any reason to invest right now at these prices. Let the market give a clear trend on the upside or downside, then we can plan accordingly. But if you are a trader and you still want to continue trading in this market, then keep very light positions. Probably reduce your position size by half of what you normally do, and then just keep trading in the market so that you don't book too many losses. Even though you might book fewer profits, but you at least won't book too many losses. So thank you for watching the video, and goodbye.